Hello and welcome to another episode of Casual Friday. Hope you've all had an excellent week. I'm here with the Duck. We're going to talk about all the red you see on your screen when looking at my watch list. We're going to interrogate Don because somehow I'm going to make this his fault. And otherwise, yeah, the usual stuff, charts, news. Don, how's your week been? What's up? What's good? What's less good?
Oh, I mean, I've been kind of like overseeing and kind of like in general having my kitchen built. And then I come back to the market and I see this shit. What the fuck have you guys been doing? I would like to know, but I mean,
I
it's
mean,
what
the
it is.
the sellers just keep finding tokens. I've been following
But
NASA's
where?
feed. That's the thing. I've been following NASA's feed, waiting for them to announce like a meteorite or something or an asteroid hit the Earth, just full of tokens, and it's all that supply flooding the market. Because otherwise,
Uh,
that shitty joke aside, this is one thing that I find uncomfortable: is people have been arguing at length like who's left to sell. Right? It's like
yes.
everyone who wants to sell sold. And I don't know, man, that's like never been persuasive in my head. Not just as like a general principle, because I find it almost arrogant to be able to forecast kind of everyone in the market and what they have done and why they have done it and that they've finished doing it, like as a collective or as on a net basis. That's always been like a very, I don't know, that just makes a lot of assumptions that I'm not comfortable with. And the second reason is specific to the current environment. Like, if you just take a step back, like, who are the sellers? Okay, well, who have been the sellers for most of the year? A lot of it has been sort of macro flow driven, right? Now, of course, towards
Yes.
the final end of the last few legs, like from 30 to 20 and 20 to 15, there was like an extra liquidity crunch created all by all the forced sellers as a result of crypto specific implosions. And I think people have just zeroed in on that and said, well, because the brunt of that sloppy selling may be over, therefore the market's just going to float up now. But I think it ignores the fact that the biggest driver overall for all financial markets has just been the withdrawing of liquidity and the shitty macro environment and all the correlation sellers and so on and so forth. So it's just a very strange argument to make because I think it's just very hard to quantify and think in those terms. But also it just ignores the biggest reason that risk markets have been facing what they've been facing, which is the macro environment. It's like just because crypto blew up, that's sort of the implicit assumption is that the same macro flows that have been driving the market all year, those don't matter anymore because everyone who had crypto kind of lost it on Luna and lost it on FTX. So I don't know. I think if you're going to go around crafting arguments, like I've personally never leaned towards that whole everyone who wanted to buy bought, everyone who wanted to sell sold, there's no one left, there's everyone left. I've never found much solace there. Have you?
No, I mean, the thing is, like, people, there's always new sellers, right? The lower prices go because people that bought before are going to sell. Like, it's just how it works, right? Let's say you buy 20K and it goes to 15, there's a good chance that you're actually going to sell just because you're like, fuck this. I didn't sign up to lose money. I signed up to win money. And then, like, the lower prices go, like, the new sellers can just be old buyers, right? That's just how it goes.
Yes.
So I don't really subscribe to it either. I don't really think, like, you can argue a lot, like, everyone that's bought has bought, right? Like, that argument, I mean, I can see, like, when you have like a range and you keep on hitting the lows. And I can also kind of see it when you're like hitting range highs. You're like, okay, everyone that's sold, or everyone that wants to sell sold. But I don't really see it when price is moving down, right? Because then you can get new sellers by just having price move down further. And you actually, like, price, not many people have to sell to make price go lower if there's no buyers. So you can just have like a few previous buyers sell and then the market just disappears because there's no buyer. And
Yes.
yeah,
Like
I
the
so
market can get
I
thin. It's all sort of liquidity type of constraints
oh
as
yeah,
well, right?
I mean, that's what we've kind of been dealing with. If you look at the charts, it's basically like you have like a move up or something, and then you go sideways, and you don't even see any movements on the charts really. Like, it's
Yeah.
just illiquid garbage.
Yeah. Yeah.
The only market that really like has like a little bit of up and down movement is Binance, and that's because they don't. I think they still have zero fees on the spot. Not entirely sure. Haven't checked with it,
I
but
think it's the BUSD pairs, right? That are zero
yeah,
fee.
I
I
mean,
think so.
I know that Bitcoin didn't have on spot. Yeah, maybe
Right.
on probably on BUSD. I mean, I've been trading with BUSD on there, so hopefully I haven't been an idiot. and
While
paying
you were
fees,
running
right?
away, I was depositing millions to long, you know. bring all that meme. So yeah, I don't know. That's just kind of been the prevailing thing. I mean, we'll talk about the news and other stuff, but for me, it's just I kind of wanted to start there because it's one of the more popular arguments floating about, and I've just never found it useful to think in those terms. I'm not saying it's wrong to think like that, but it just leads you to some strange and maybe premature conclusions sometimes. Well, like, you know, if the market's setting an all-time high, why would anyone ever sell then, right? It's like because everyone's
Yeah.
making money, but then you have to think, oh well, there are profit takers or people who bought at different legs, and it very quickly becomes apparent that it's not that easy. That everyone who wanted to do X has done X. Like, you don't know what that everyone is, you don't know what that process is, the reasoning behind that process, and then how they might act in the future, or based on price or whatever else, or even based on volatility. Forget price, right? So yeah, all sorts of. With that out of the way, let's actually talk some charts, Don, because you know they look slightly different to last week.
Oh, I liked them better last week. Can we just
I
go
can
back
imagine.
to last week?
You know what? I'm not gonna attack. You know, I'm not gonna attack the monthly time frame. We're halfway through, and we're now below the monthly open. And you know, it's just there's not a lot there. Last month was the one that was telling in that it was a bearish engulfing on the monthly for BTC USD, but it's not one of those fast-moving time frames. And as we discussed, you know, if it's not at 20k and it's not at 14k, the monthly time frame outside of the monthly open or some other stuff is going to give you pretty limited information, right? So we'll jump straight to your famous hook. I don't know what you know. It's turned from a hook to a I don't know what it is now, Don. But this is looking less hooky. Looking at this Bitcoin weekly chart, is this like how this is like? Look, we talked about, and this has become more apparent. We discussed the daily time frame. We talked about some worst case scenarios for this thing, right? Which would be that it doesn't come back to retest, or it's a failed breakout on the daily. And you know, even the newsletter we wrote, and you know, if the breakout fails, that's like really bad because it's a downtrend, and all the other arguments we'll address at length. But just on the weekly, if we almost take it back to 50 IQ, this candle's looking kind of ugly, my guy. Like, what do you think of this?
I mean, honestly, I don't really care too much about the weekly candle. Like, the daily is much worse than the weekly. It's just like a weekly candle that faded alongside the S&P. I don't really mind that too much. The daily structure is a little bit less good. But yeah, so weekly time frame obviously had like the full week retraced, which is not great. And especially if we go back towards like the low 16Ks, that starts looking really shaky at best, given the daily structure. Like if we start failing anything down there, it just kind of looks really, really shit. And so yeah, on the weekly, we're still above 16.2K, which is the support level that it needs to hold, which is still like, I don't know, like $600 something below current price. Haven't looked at charts in a while.
Yeah.
Horrendous, by the way. Every time I look at it, I'm like, what the fuck? I've just gone like 2 days. And,
Who did this?
yeah, it's not fair. It's not fair. At least do it while I'm at the computer so I can watch my net worth disappear.
Have the decency, you know?
Yeah. But
like,
yeah,
if you're going to take me by behind, at least give me a mirror to look into, right? Like,
yes. But yeah, so on the weekly, I'm not too like it's like it is what it is basically. Like it's not the greatest candle, obviously.
That's so unreasonable. Like,
yeah,
it looks like one of the ugliest shits ever. Can't even get to the breakdown level. You know, Tesla wick spikes 2 weeks worth of highs and just starts to teleport down. My man's like, it is what it is.
I mean, the thing is, right? You're expecting ugly price action given the trend that we've had.
Right.
So every single, and I mean, you can go through the history of Bitcoin, like every single instance of where it's gone sideways after a huge nuke, you get the worst looking candles. And you're like, okay, this asset thing is like just going to zero. So I'm like, yes, it's not a good candle. I would not necessarily, like, this is obviously not something I want to see. I want to see how it closes first and foremost. If it closes like this, good chance that next week is going to be like a red one as well, just given that people will probably sell the moment they see a candle like this close.
Sure.
But like I said, as long as it's above 16.2K, the weekly time frame itself is okay. It's just that the daily starts looking really,
let's talk about the daily. And also just like a final point on the weekly that I've been thinking about. I've kind of been using Friday's close as a mental weekly close because the weekend price action has been so garbage that it almost
Yes.
doesn't make a ton of sense to wait for those final 2 days, because like Legacy's closed, all our volatility comes from correlation pretty much. Crypto flows are garbage, and it usually just goes sideways. So I still make like a mental note of where Legacy closes when I'm looking at Crypto Weekly, because my expectations in general that not a ton is going to happen unless it's in the worst case scenario, right? Which is what we've seen. The really sloppy kind of liquidation driven overnight selling that we had at like the 20k leg, or was it 30 to 20k leg? I think saw some crazy weekend selling. So like if you're closely paying attention to the weekends nowadays, usually it's only for bad reasons, which is a sad indictment on the market. Now the daily, look, I think we were quite clear in terms of expectations and whatever else. We had the kind of range between 16 and 17.5 basically, and in last week's video, which I watched before this one, just to kind of make sure I'm not hallucinating, one of the arguments we made in terms of worst case scenarios, or what would be an ugly trap, etc., was actually kind of what's transpiring right now or over the last couple of days, which is a failed breakdown through the range high. And then a move and a close back within it. And that's pretty much one-to-one what we've had. You had the breakout candle, which actually looked pretty good, right? That's like a decent breakout candle from the range. And then you had this ugly type of FOMC, barely green candlestick chart, 101 baby pips example of something like a reversal. And then yesterday closed back inside, and then today just seems to be acceleration of that. And we're currently hovering just at that weird consolidation block before the impulsive move. But like, I think if you pay more attention to the boundaries, we had a failed break at the range low. It went to the range high. Now we have a failed break at the range high. Do you think we go back to the range low? And if so, isn't there a higher likelihood of continuation to the downside given it's a trend? Right? So if you're in a downtrend and you get a failed breakdown, you expect a bounce, but not like for that to reverse the trend. But if you're in a downtrend, if you get a failed breakout, that's like a continuation setup historically. So what color would you like to add to the daily? Because at the moment, I don't know, man, it needs Jesus and whoever you pray to, really.
I do kind of agree. Like the daily looks shit because I talked about this on Wednesday's stream as well. Basically, there's two ways out of this. Either we just full send it, or we fall back into the range and then we just head lower. Now we did exactly that. We fell back into the range. Actually gave like a nice retest. Obviously without me being at the computer to do anything about it. Yeah, that's like where the trouble sets in. Like I'm not too worried when I'm looking at the weekly, but looking at the daily is horrendous. It's a false breakout, which in a downtrend you absolutely do not want to see. That's usually like where the top is in that case. And then like you said, basically, like you have to have your target at the range low, but given that the range low is so weak here, you would want to basically expect that to be ran. So you want to, like, if you target range low, you actually want to target lower. And then you can argue, okay, you're going to find like a bottom by going sideways down there, like wiping out, going sideways, coming back into the range. That's an easier argument to make than be like, okay, the range low is going to hold again. So we're in this shitty situation where this shitty support at 16.8, which we are at right now, basically the range before the false breakout.
Well, that fun volatility week, right?
Yes, exactly. That kind of has to hold. If it doesn't hold, you don't really have much else. Like you have 16.2, which is a really, really shitty support level. And then you're already at range low, and then you kind of like you don't have anything left. So it's like it's a really shitty looking chart. It went from like looking quite good to looking quite shitty in basically 2 days.
That's all it
free
takes.
If you count, yeah, it's free if you count in like the reversal, basically the FOMC day.
Yeah.
So yeah, we're kind of in the situation where current support, basically current price has to be support. If it doesn't, this just kind of probably starts wiping quite hard. And that's where I see the problem. Like I don't really, when I'm going to the weekly, it's just an ugly candle, but it's in an area where you'd expect ugly candles. The problem is the false breakout on the daily, which kind of looks shitty. The saving graces that this is mostly, I would say, in line with the S&P. So basically, if you don't get any new bearish flows on the weekend, and then you get S&P strength on Monday again, you have like a little bit more hope that it's actually just been mirroring the S&P, and then you get S&P strength, we go back up. The problem is that the S&P, if it closes like this, which I mean, it's just 5 more hours to go, is actually going to lose weekly support, which I mean, it's just not great. So there's a lot of things.
As far as the weekly S&P goes, can we at least agree that's not a good candle, or are you going to hold judgment on that one as well?
No.
Like,
That's a horrendous candle.
Right. Yeah.
Like
that's
the
weekly
Bitcoin, I'm like, okay, that's okay. That's in an area where it can do this. It's not the worst, but the weekly S&P candle is horrendous. Interesting fact, and we talked about this last week, is that even if we close below the weekly, we're just ahead of monthly support,
37,
which is which is really strong. So this is a shitty area to trade in,
right.
because you're basically, if you're shorting into S&P monthly support. As you can see from the last 2 days, Bitcoin is trading the S&P basically. So it doesn't really make much sense to be bearish into that block. But it's also like, it's this shitty situation where it's far enough away where you think, okay, this could have like a big impact, but it's close enough so you don't want to necessarily trade it. It's hard. Like, it's really, really hard trading environment. It's hard to analyze too, in my eyes. Like, you have to act quite quickly or just slowly, but be okay with giving back a lot, which I'm currently doing, because I'm still in profit, right? It's not like I'm losing money, but it's obviously much more comfy when you're in profit by like 20% and not 10%, and it goes down 10% every day. It's kind of like you feel like you're not going to be in profit for much longer.
Well, if the maths checks out, you know. Yeah, all of that makes sense. I mean, dude, you and I have spoken at length at how powerful these failed breakouts are, right? Like, there's just like one of those really high probability, high strike rate types of setups that are worth taking seriously. And you know the market's doomed when I had a tweet that aged well, right? That's really a sign of the end of times. Because I kind of just opened up a chart today while this daily was still green. Believe it or not, there was such a time, Don, where the Bitcoin and ETH dailies were green. And I just said, like, look, Bitcoin fell back within the range, ETH back within the range, S&P below 3,900. So like all of your risk on signals that existed 2 days ago no longer exist. And that's like not great. And that's going into the weekend as well, where you wouldn't expect that picture to shift massively. And then the market just kind of turbo nuked from that. Obviously, because the tweet was right, I made $0 on that trade, but this is a trade I'm very familiar with in terms of, my own book, so to speak. So yeah, Bitcoin... weekly, apparently we're going to reserve judgment on the daily time frame. Failed breakout is garbage. Look, Don, I want to add the usual precursor of, but if it reclaims the resistance, but it just doesn't happen all that often. That's like fairly unlikely, unless, I don't know, the S&P just teleports to turbo million. Once the daily failed breakout sets in, like it tends to be not so great. And even if it does bounce before the range low, it doesn't tend to go as high as reclaiming the level itself. That would be some sort of turbo bull scenario, And then you're reversing the weekly as well and doing all sorts of shit. So I kind of agree with you. We're at around this range midpoint now, at 16.8. If that's not good enough, and for me, I'm not willing to bet on the range midpoint in this environment. I like to think I've got better things to do with my life, especially immediately off the back of a daily failed breakout. I'm not gonna that's just not an area that's compelling to me. So my eye is drawn to either range high reclaim, which I think is a fairly low probability, just based on how price usually resolves these things, or something happening at the range low 16K, being a wipeout, reclaim, or just straight up breakdown. That's sort of the next level to look for. And again, I think even that is somewhat skewed towards continuation given the trend. And look, I think bigger picture, like you and I discussed at length, like this daily range isn't like super mega important, especially if you take like a monthly or kind of more defined weekly perspective. 12 to 14K is huge, 20K is huge, 16 to 17.6 less so, right? So there's always good areas left, regardless of how this specific rectangle or consolidation resolves. ETH, however, has been outperforming, just not in the right direction. There's a similar, I don't know. I mean, look, it traded into that 1300 weekly consolidation and just ended up swiping the highs and not breaking through at all, right? So that got cooked. And on the daily time, I don't know what we think of that weekly. I'm sure we can revisit it. But on the daily, it's pretty much the same pattern, right? You had like a multi-touch mega baby pips style level at 1300. And then we closed below that yesterday, and today is just acceleration through the most recent swing low and into the range midpoint now at 1200 or thereabouts. So I think that's also like if you zoom all the way out, you've probably got it like that, right? The 1200 going all the way back to the former range high in June, the pre-merge type of support resistance candle. So what do you think of ETH? Is it more or less the same thing? They failed breakout bad, midpoint meh, maybe range low, but be careful because the downtrend type of thing? Or has the relative strength in ETH given you other thoughts?
No, it's pretty much the same thing, really. Like, especially given, like, I have 1.2 to 1.25 boxed out as support. And if we start losing that on the daily time frame, if you start losing that, we basically had a false breakout to the upside and then lost support, which is just bad news. Like, you don't want to have both because that's the most important structure on the chart, at least on the daily time frame. So no, that kind of starts looking really shitty really fast too. It's basically we're reliant on a little bit of S&P strength or like crypto specific strength going into the S&P close, and then having a decent daily close today and a decent weekend. And
That's the thing. That's the thing that gets me done. The decent weekend part, right? Like even if you want to buy these levels, like let's say you buy the fucking level and then you're stuck in dead zero vol weekend most likely. And best case scenario, you get bailed out on Monday, right? Or on the Legacy Open or whatever it may be. So why not just trade that instead, in my opinion? Like I at the moment, and I'm not accusing you, I'm speaking like in general, I'm not like, even if the levels are there, structurally speaking, and again, I have my reservations, I think your odds are better trying to punt them on Monday than they are on Friday into the close, unless it's for like a very, very short-term trade, because that's ultimately what's going to determine whether they hold or not, right? It's whether Legacy just pukes on the open and through Monday, etc., or whether we kind of get a bit of a bailout from our correlation bot trading brothers. So my expectation of crypto weekend volatility is still low. So even if you do end up doing business at the right level, it might just be a case of shitty timing,
Yeah, I mean, that's basically like my point was like there's a lot of shit that has to go right to kind of get this good again. Which is just which is a shitty situation to be in, right? So I do agree with you. Like if you have if you're not in a position, it would just make sense to just give it some time. I think in general, like for both Bitcoin and ETH, we have like a new setup now, which is basically just if you reclaim these breakout levels that horrendously failed, it starts looking really good. Until that happens, I mean, why the fuck bother? Especially if you have such a nice entry there, like 1.3K, you start closing both above there. It's probably gonna 2%. I mean, that's just like a really, really good setup. Whereas this right now is just not. I still want you to buy it because fucking rescue me, please. No, but like for real, like you want to get good entries, right? And I mean, this is the thing, right? When you're buying bear markets, basically, like you either buy low, and I managed to do that quite well, and then you have the luxury of either sitting it out or just closing in profit and trying again and again and again, or you wait for the really good setups. And in this case, they're mostly bearish or like very, very strong kind of confirmation setups. And this would be one of them, I think. Bitcoin back above 17.5 looks really, really good. ETH above 1.3K looks really, really good. Until that happens, I mean, like, you're either an investor, you have a little bit of hope left. There's kind of me right now because I'm just like
I was gonna say, well, you're a duck.
Yeah, I'm down to kind of see basically everything, like the positions that I've held from the low kind of go back to zero. I don't really mind it too much because I want to have some crypto exposure. Even in my trades, I don't mind it too much. But I gotta say, like, this does not look good. Like, this is not how it's supposed to look. I'm still
Supposed
holding
to.
on. I mean, supposed to look for a reversal, right? Because
Yeah,
you
yeah,
would
yeah, of
wanna
course.
you wanna see some good price action, not this garbage. Now, like I said again, it's largely S&P focused. The problem is you actually want to see a decorrelation of sorts, and if the S&P goes down and Bitcoin cannot keep up, or actually like even underperforms it like it is doing today, that's not necessarily what you want to be seeing for bottoms, right? So
Oh, yeah.
I don't think it's the best excuse. It's S&P weakness, yes, but we should be strong enough to kind of hold some against that, which is not the case. So not looking too pretty, and it's going into the weekend. So like you said,
God,
it's probably going to
miserable.
be garbage price action.
Like, it's either garbage, like it does absolutely nothing, or it's like mega bearish of someone blowing up over the weekend and having to forced sell. That's literally been the weekend for the past, I don't know, however long. There've been no
Yes.
like fun altcoin rotation-y crypto flow weekends. It's either just garbage, wait for legacy, or someone's getting fucking carried out on a stretcher. So yeah, that's not great. As far as the S&P goes, I actually had a monthly level at 4130, which ended up being the Pico Schmico wick. And it's actually not much of a level at all, Duck. But it was just the top of that most recent, the July green candle, and I had that as like a mini sneaky range high sort of thing. And I was surprised that's kind of all it took for the market to puke. But for the sake of consistency, and I certainly subscribe to this view that like 3900 was a really good line in the sand. As far as weekly structure, daily structure, how the market was responding to it, so on and so forth. And it's also been very price sensitive. Like if you look at that, I've got it as 3911.5 from the weekly time frame. Even the daily closes around that level have been like pretty much surgical, right? Without many fake outs or anything like that. And that looks to be decisively broken and now following through, So again, I agree with you in terms of sometimes the market's so bearish, it gives you future bullish setups. Talk about bear market cope, right? Like, but I do believe that type of argument. So, as you said, BTC above 17.6, ETH above 1.3, and in some world, S&P above 3,900, at least as like a starting point. I think it needs to make some more progress in general, but like as a starting point, given how important this level was and the current magnitude of the breakdown, the S&P above 3,900 would be welcome, I think. And you end up basically getting the reverse of what I tweeted today, that, hey, look, failed breakout, BTC, ETH, S&P below 3,900. If you can start to come to terms or, price moves such that you get BTC above its range high, ETH above its range high, and S&P reclaiming support, basically the inverse of the bearish out scenario for today, then at least you're in business for something. But none of that is currently available, and I do worry for this monthly, to be honest, Don. Because I don't know, I agree it's a good monthly structure, but it also feels like it did its job, right? The rally that came following that reclaim, at the very least, hit some level of resistance. And if you look on the kind of monthly line chart, that starts to scarily look like a lower high.
Are you talking weekly or monthly?
Monthly line chart.
on the S&P.
On the S&P, yeah. That starts to look like a lower high. And thing is, the inverted head and shoulders bounce of support setup, it's already played out once, right? Which was last month when it wicked it perfectly. So you're essentially, any bullish bets on the S&P below 3,900 are implicitly making the argument that the move below it has to be the bottom, and that the bottom is in on the S&P 500, because look, if we go below that monthly structure, then the over-under type of argument fails, the inverted head and shoulder argument fails, and I don't know, to me, the lows become super vulnerable. So that's tricky. Because it's not like the first time we tested this level last month, we were both like, yeah, look, shift in behavior, this is different and it's good. And it should have been, except FTX imploded, right? So that wasn't fun. But I just don't like, similar to your argument that you made in terms of the daily range, going back to that support after resistance in a bear market is lower probability. I feel like that should be extended to some extent to the S&P as well. We've already had the failed breakdown setup, the bullish setup play out on this thing. And if we're back at that support again, after the best setup that could have formed on it has already played out, my confidence is going to be lower at the very least, back at 3760. What do you think of that jumbling mess?
For me, the wick doesn't really matter too much that we had to that support. So if we close at that level again, I will have to be quite bullish again. the S&P. Like I'm honestly quite very, very bullish if we close down there just to kind of take a little bit of a bounce.
But do you care that the weeklies gave you that type of wick close, like body candle retest, or is it just strictly like?
I mean, the thing is, like, if you get a bounce off of the monthly, we run back into that trend line again, and that trend line kind of broke the ankles of not only the boomers but also me.
It took everyone.
It
No
took everyone.
prisoners.
But I think if we get back to that trend line, it's probably gonna break. So like if we go back to that monthly level and we close there, we don't have to close there, right? It can be we close below it, and then it's obviously bearish, right? But if we go back to that level, close around it, show a little bit of absorption, I actually still think that it's a valid level. I mean, I've been saying that I'm expecting some sort of range between the monthly levels, as in like 3743. Anything in there, I think goes is quite probable. But yeah, it's obviously not the best look given when you have these kind of bounces, you want to make new highs, and we close the lower high, like you said. So yeah, it's a shitty situation. Like, I don't want to be bullish the S&P because this very much kind of looks horrendous, even when you zoom out a little bit. But it's still support, and we still had like a fake out below it. So
Yeah.
I would bid it on crypto anytime I have this structure. So the same is true for the S&P, really.
One
like
last roll of the dice of
Yeah,
3,700.
and honestly, if that level fails, I mean, it's a long way down, right? Because we've tested 3.5K support. 3.5 is basically that last kind of pullback that we had before the blow off top. And if that goes, I mean, the next level is basically the Corona highs, right? Before, like, as in like before Corona hit, as in 3.2. And that's another 12, 13, 14% to go. And if we go there, it actually starts looking quite shitty, right? Because you don't necessarily want to be retracing to those kind of levels so quickly. If it goes slowly, it's one thing. But if we just kind of like collapse the entire way down, you'd want to have to bid basically Corona lows again, which is horrifying to think about. So yeah, I don't know. I think it's a good level of support. It's basically the last defense. So
Yeah,
I still think
it's good because it has to be good. Like, it's good out of necessity.
But I think those levels are usually quite good. Like when it's like the last level,
sure.
People usually bid it. That doesn't mean like, let's say we close at that level on the monthly. People very likely are going to bid it, so it's probably going to bounce. If that bounce is shitty, I'm going to be the first out the door, right? I'm going to be like, okay, this is horrendous, because that's not what you want to see. You want to see a strong reversal off of it. If it's a shitty bounce, starts looking really, really bad, really fast. And I mean, I'm not saying this is looking good right now, because it's really not.
Right.
It's kind of ugly.
So any acceptance below 3,700 is just bad news, basically, I think.
Yeah. At that point, like,
new lows, right? Like,
yeah, something's horrifically wrong, and I mean, it has been, right?
The
like
market.
We've been colossally fucked, market-wise. Inflation-wise, it's been getting better, right? But just prices-wise, it's been not that nice. So
yeah, that's fair. So I mean, all eyes on 3,700 or 3,900 reclaim / trend line. Next time they won't be so lucky type of setups. I think all of that is rather reasonable. Yeah, I agree on the 3,700 point, because it's like the only structure you have. I guess I'm just like, pissing in the wind, making determinations as to how strong it might be or might not be before it actually gets there. Obviously, that's an assessment you make when it actually gets there. Like, is there any absorption? What are the bounces like? What do other markets look like? So on and so forth. But I think in the short term, at least until next Casual Friday, the range is between that 3,700 monthly support and the 3,900 breakdown point. Is that fair?
Yeah, that's fair.
Cool. And then we can see what we're left with. I want to talk to you about Litecoin. I don't know if you've heard of this coin.
I have.
It's the digital silver of the crypto space. And look, Don, I'm going to be very frank with you on the Litecoin point. Okay,
please.
I offered you the deal of a lifetime. Give me $100 and I delete my weekly resistance level at 79.50. And nothing. My bank account stayed as empty as it's been all year. And look at you now. Look at where the last green candle on the daily tested before it fucking teleported. It's 79.50. It's that weekly level.
It's very much not okay, actually. Worst investment I've never made.
I know, like $100, dog,
$100
to secure your $10 zillion trade, and you just thought you were too good for it.
Yeah, I mean, this is an expensive lesson in I should have sent you $100 because yeah, I mean, I've been bleeding out the ass on Litecoin. It's still up, which is funny. Like I'm still up more than 10%, even though it's like down a horrendous amount. It's down 20% from the high. Still up 10%, but I mean, like I said, we're losing 10% every day. So I mean, who knows how long that's gonna last? Yeah, I mean,
what do you think of the chart? Because look, last time we spoke, the argument was essentially, at least on the USD front, that this is just a post-breakout daily time frame consolidation. Spoiler, it was distribution. But anyway, that was the context of the discussion. That it impulse went through the range. It's the strongest altcoin in the market. It's moving sideways now after an impulse. The BTC pair looks good, so on and so forth. Even though it was into my resistance level, the argument was that this will, just like with the normal trend, impulse, consolidate, impulse, that this consolidation resolved to the upside. I asked you a question, which was, how long would it have to not move for you to be like, okay, this probably should have impulsed by now if it was going to be right? Is this the case where I think, dude, I've known you for a while. There's no way that if you're at your desk, you're not puking this yesterday or even the day before that, right? It's like, I don't know, man.
I don't think so. No,
Really?
I mean, I still like it. If I didn't have the position, I'd still buy it.
Okay. What do you like? Is it the daily sort of?
Oh, I mean, it's retesting weekly support right now. It's still outside of the range. So, like, the moment it starts closing weekly, and I mean, this could happen any day now.
Before the end of the episode.
No, but like the moment we lose 64 on the weekly, 64. It starts looking, which is pretty damn close, which makes it a decent bet risk reward wise.
I see where you get your 64. Yeah, I got it.
I like it until that breaks, basically. If it falls back into the range, then obviously this looks like distribution above the range, and I'll take the measly like 7-8% that I'm gonna make off of the trade and just try again another time, maybe with another coin. But right now, like I really don't mind it too much. Obviously, do mind like giving back like 20%.
It's rough.
It's not the best, obviously. I'd rather have just like bought and it go up in a straight line. But given where we're at in the cycle, I don't necessarily mind holding it. Like the thing is, when everything's down so low, and I get like a good setup, I will try to hold on to it as long as I can, even when it looks like a little bit moronic, right? And I mean, I can see how this trade looks a little bit stupid now, given I bought 60, it went to 84, now it's back at 66. But basically, I want to have this as long as I can, because I think it could be the bottom, as in like that the bottom's in on it. And if I'm proven wrong on the trade, I will get out of it, like always, basically. But I'm gonna hold it until I'm proven wrong.
So you're thoroughly invalidated, basically.
Yeah. And I mean, obviously, like saying this on a day where it's down 7% doesn't feel nice. It's the same really on like, I mean, everything's down a shitload today.
Yeah, sure.
But yeah, I don't think, even if I was at the desk, if anything, I would have hedged Bitcoin because that was pretty obvious.
Yeah, fair enough.
Because I mean, and I talked about the setup yesterday on stream. Basically, you start losing the range, you have to expect the range midpoint or range lows, which I mean, the range midpoint we hit pretty much immediately today.
Yeah, the close was yesterday, and the impulse came like a day later. You know.
Yeah.
So.
And I mean, that would have been like, that is something that I would have managed the Litecoin trade, not necessarily, just based on the fact that I somehow, like, even if I look at the Litecoin Bitcoin pair, if I look on it on a daily, I start puking. But if I look at it on the weekly, I
do want to look at LTC BTC. Hold on, LTC. BTC.
Don't look at it on the daily though. That's
what I'm gonna start with. Hold on.
Oh, that's not okay. You're gonna
LTC BTC. Oh, Oh
Beautiful.
man, this is yeah, that's those are some candles, you know.
Yeah. But if you the further you zoom out, right,
Dude,
which
you're just
which
full of
sounds
like, oh my god,
horrendously copy,
who am I
but
talking to?
but the thing is, like, I took this trade based on the monthly, right?
Yes.
So, like, I'd be stupid to manage this on the daily, unless I have a really good reason to. Now, obviously,
I
like I
agree.
said, yesterday's daily close on Bitcoin, that's something that you can trade around. This is what I usually would do. Basically, I see a horrendous close on Bitcoin. I just kind of hedge positions, and then if I still want to hold the positions that I'm hedging for, I just close the hedges the moment I think it's starting to look better. If it doesn't start looking better, I just keep the hedges and close the actual positions, right?
Yes.
Now, I cannot do this right now, given I've not been on the computer. And second, I don't really short anymore. It's kind of been making trading much, much harder. But yeah, I took the Litecoin trade based on the monthly, and that still looks good. I took it on the weekly, and that still looks decent to me.
Yeah, can we talk about the weekly? Because on stream, I'm not going to go over the point that I watch yours and you don't watch mine, but on stream, you made the argument for like the pullback to some of those highs that were broken around point double oh
Yes.
0.004 or thereabouts. And, you know, those are looking less good than they were, let's say, during the live stream. If the weekly closes like this, would that be some sort of signal? Or is it all just like, you know, whatever? I don't care as long as the USD pair isn't invalidated.
I honestly don't give a shit about like, as long as the USD pair isn't invalidated, I'm gonna keep the trade.
Yeah, fair enough.
Given honestly, like, the Bitcoin pair still looks good as long as it's above 0.003.
Just zero.
No, but 0.003.
Yeah.
And this is horrendous, right? That's very, very far below where we are right now. And I'd be deep into like the negatives at that point because it's 20% down. But that's where the Bitcoin pair starts looking like shaky if we start losing that, which is way too far away for me to kind of base off, like, be like, okay, I can hold this until we hit this level,
Yeah.
or lose the level, because I don't want to hold the trade where I'm down 20%. I'd just rather try again at some other point. Like I said, I'm miraculously still in profit, which, I mean, yeah, much less so than previously.
I mean, look, the argument was basically like, if you were going to manage the Litecoin position, it would have been yesterday based on the Bitcoin setup, but you weren't around, and so everything else is just at this point. It's you're either invalidated or not.
Yeah.
Right.
Yeah. And
Cool.
basically, I mean, you just the weekly USD pair, I think, is the best to kind of judge this. Right
Yeah.
now, it's a pullback to the level before Bitcoin nuked. That horrendous looking weekly candle on Litecoin with the big wick. We kind of retraced all the way to the top to that. So if we close the week above it, it doesn't even look bad on the weekly time frame to me. It's just that we're battling with a horrendous looking Bitcoin chart.
Yeah.
So Litecoin, Bitcoin would have to do something, and right now the only thing that it's been doing is been down only. So yeah, it's obviously not the greatest given the recent development, but it's still the same trade. Like, I don't necessarily move my invalidations away just because I've not been on the computer, or like in general. Like, I'm just holding it until it's invalidated. Good thing is, invalidation is still above my entry. Bad thing is, I'm gonna give back a trade if it does invalidate me where I was up 30%.
Yeah, it's okay, dude. Just come up with some like complex sounding word salad. Like, I'm happy to pay a volatility premium for convex exposure to the asymmetrical upside using whatever derivatives, which you're not even using. But as long as you just make it like, you have to find a way to intelligently articulate the idea of round tripping bottom ticks longs in a bear market. And if there's anyone that can help you with that, it's me. So we'll.
I have a few ideas how to phrase it. Like, you could say I've had exposure to the market in an asymmetrical kind of sense, fashion,
Yes.
whatever. And you want to keep that possibility open as long as you can. Which,
yes. As
I'm
one of the
doing.
last remaining liquid counterparties in crypto, I chose to take it upon myself, you know?
Yes. But
God.
no, it's like trading can be nice, trading can suck. In this instance, it's just kind of like it's gonna suck if I get invalidated, but I'd rather get invalidated because honestly, like something that I've written down over the years more times than anything else is that I close trades too often. Like I've bought almost every bottom on Bitcoin. I've bought almost every bottom on ETH, and I've made good money with it, right? And I still think like that trading strategy has been working wonders for me in the long run. But what's something that always happens is basically I buy the tick, the low of the day, the low of the week, the low of the year, and then I give it up basically 20% higher. And in this instance, I just like basically got the same setup that I've had for Bitcoin bottoms, for ETH bottoms, for everything else. And I just decided that I want to move away from this. Okay, I'm taking 20% and then just take another trade another day kind of approach. And I want to move away from sitting in front of the computer all day, basically by I get a long-term kind of good high time frame setup. I'll take it and I'll try to kind of just give it as much space as it needs because that's a mistake, or not necessarily a mistake, but it's just I want to move away from the trading style of like just going for the 20%, which is, I think, a really valid trading style, but it takes more time. And I want to move into kind of like more position trading, basically like getting a position, giving it the room it needs, and then riding it out until it either fails or kind of goes to target. And I'm happy with that, honestly, even if this kind of goes to shit. Still don't think so, honestly. Still looks good to me. But if it does, just is part of the process.
Yeah,
and
can you
I'm
do
down
that in a
for it.
bull market, please, so it's easier? Give yourself a break.
Yes, but the thing is, like, I mean, I'm always gonna be the one that's gonna buy the lows, right? If I can. That's just kind of something that I'm not good at buying. Like Litecoin at 300, even if it's like that. Like, let's say Litecoin goes to 300, right? And
Also known as your first target.
yes, and then you're gonna try to sell me Litecoin because it's the third test of 300 or whatever, and I'm gonna be like, dude, Litecoin is fucking $300. Who the fuck wants to pay $300 for Litecoin?
Yeah.
And it goes to 1,000, and then it goes to $10 after, right? It's
Yeah.
like I'm not good at that. I know that I'm not good at it, but I'm good at kind of picking the bottoms, and then I mean, like I said, I'm not gonna lose money on this trade. The thing is, I took profit once and took a 10% home, right? That's basically the cushion I have for this trade. And if it fails, I'm just going to take another one in a week or 2 or 3 or 4, or a month or 2 or 3 or 4. And I'm probably going to do the same thing again, right? I'm going to buy it and I'm going to see if I can kind of catch the cycle load, because I think crypto in itself right now is decently cheap to kind of take those chances. Like, I don't mind paying in a few percentage of trades that I could have made otherwise. That's kind of what I'm paying. Like, I could make more by taking profits and then just rolling it. But I don't want to, it's fine by me kind of taking these longer term trades. And I want to keep doing that. We'll see if this goes well or not. If it doesn't, where I'm going to buy next or what I'm going to buy next. But
Yeah.
I don't know. It feels nice to trade like this, even though you kind of sometimes have to give back profits.
Yeah, that's fair. I mean, not the whole. I mean, we've discussed this before, right? It's like, first of all, not everyone can do the whole buy high, sell higher type of thing.
Yes.
And it's funny, you and I both have mental blocks for certain prices in crypto. Like, it's at some points it hurts us, but at other points, like, we were talking at like 60K. It's like, dude, that was at the new all-time high. I remember having this conversation with you.
Yes.
I was like, Don, it's a new all-time high, but man, 70K for one Bitcoin, it's just a lot, It's just like, I can't bring myself to spend 70 grand on one Bitcoin. And sometimes those biases are helpful, otherwise other times they're hurtful. But if you're aware of them, you can kind of plan around them. And then the other point I will mention, as I mentioned at length before, is you can afford to trade counter trend if you think that if two things are true. One, you think the trend is close to exhaustion, and two, if your entries are really good. And I think with your approach, both of those things are kind of catered for. And I guess the third one, maybe I should mention that as well, because it's very important, as long as your trade management is good. So those three things, like the whole trading wisdom of never fade the trend, don't trade against the trend, I think is bullshit. It's just different. And I think the three main differences are like good entries, some evidence of the trend being exhausted, and good trade management. If you can do that, trade as much as you want, fucking counter trend, because those things will likely confer an edge. So, usual stuff there. I don't know if you want to talk about any other charts or news. Well, I mean, we'll talk about news, of course, but on the technical front, it seems fairly straightforward, right? Bitcoin daily chart just needs fixing. Failed daily breakout, not good. Above 17.6, fine. This range midpoint, it's currently testing 16.8. It's like fine, whatever. But even if you are gonna buy/trade that level, you are A, diddling in the middle, but B, you're exposing yourself to weekend price action, which is just hasn't been particularly instructive either way. So if you're gonna make a bet on these mid-range levels holding both on BTC and ETH, it's almost a better shot to do so on the weekly open on Monday after Monday's range, once you have some sense of guidance from legacy. So that's kind of 16.8 and 17.6 on BTC, with the range low obviously being at 16k. On ETH, it's the same thing. Failed breakout above 1.3k, midpoint at 1.2-ish. Same considerations apply with regards to doing business in the middle and maybe doing it on Monday if you choose to do it. And the range low, self-explanatory, untested at 1.1k. The S&P, pretty much same thing. 3900 pivot broke, which sucks. Monthly support at 3700, at least for next week. That seems to be our range. 37s to 39s, and then hopefully get some guidance from there. We haven't talked about the dollar, but I think hasn't quite started moving yet, so not terribly relevant. And the levels on BTC, ETH, and the S&P are much clearer. And I guess the final point would be that on Litecoin, the invalidation would be a failure of the weekly breakout below, like 64, 65? Any big puke through there and break-even duck will be back round-tripping huge moves, because he didn't pay me $100 to delete a resistance level on my chart, but it's fine. Anything to add, or should we hop into the developments in the crypto world?
I mean, I bought XRP, I guess.
Oh, nice. What, now, while we were talking?
Yeah, no, like just like a couple hours ago.
Okay.
Which was at like basically 0.36, which it is right now. I bought a little bit higher, but not much, based off of the weekly, basically. But it's like not the greatest setup, but the risk reward is quite nice, given that we're close to the range low, and we're basically at the midpoint of the range between 0.4 and 0.32, somewhere in the middle here. And it's the area basically where I'd expect the higher low if this is actually bullish, which was enough for me to just be like, okay, I had this position. I like the setup, especially on the Bitcoin pair. Earlier, I took the trade, took it to 0.4, and then sold because it was resistance and wasn't really playing ball. So I've re-established that position, aiming for higher with stop loss, basically. I mean, I don't have a stop loss, but with like an invalidation of basically a close below exactly 0.36. So exactly where we are right now. If we start closing below there, I start getting skittish and start kind of seeing if I can unwind the position again. But yeah, that's I have Litecoin, I have XRP, I have a little bit of ETH.
And an obsession with 2017 coins as well.
Oh yeah, it's the time of the year, my friend.
Yeah, clearly. The Santa rally.
Mm-hmm. The Santa rally has been kind of shit, not gonna lie.
We're all getting cold, dude.
Yeah, I mean, we deserve it too.
Yeah, we've been bad. I mean, some of us have been far worse than others, but industry-wise, understandable. Let's look at some of the headlines, because there's been no shortage of those. I've got a odd collection for us. Well, I think first of all, like there's been first of all, Sam got arrested, thank God. And he's gonna fight. I think he's appealed to the Supreme Court his extradition, but I don't think that's gonna go anywhere. He's gonna end up in America and hopefully serve a long time in jail. So all of that is at least positive. That there was a moment at which it's actually good. It aged quite nicely, because last week we had some what made us feel slightly more comfortable is that Twitter thread that I read out, how a lot of these processes can take time and it's not like immediate handcuffs, etc., etc. But even by that metric, it actually ended up happening pretty quickly. It's just that I just hope all of those legacy media outlets feel really fucking stupid now. You know, that's what I really want. The ones who was doing like, oh, Caroline, complex shadow, and oh, the altruist that failed, and he was doing so much for pandemic prevention, and all these puff pieces that just made us furious as a community because we knew the extent and the magnitude of the wrongdoing. I hope there's journalists who wrote basically those puff pieces, for lack of a better term, or at least, if you want to be charitable, pieces which failed to convey the severity of his misdeeds. Some egg on their face and some humility, I think, would be very welcome. So at the very least, there's that plus. The other point would be there's a lot of Binance FUD still flying around.
Oh, yeah.
And most recently, I don't have the article here. Here we go. So the firm that did a lot of the crypto audits, which was Mazars, and they did it for Binance. I think they also did it for KuCoin. And look, these weren't audits, right? They were like, they're not audits, not attestations either. There's like a specific technical term for what they did, and the word is escaping me at this exact moment. Let me see. God, yeah, I'm missing out on the exact word, but like basically the exchange outlines the parameters through which the firm engages with them. And then the report is kind of much more specific in scope than some sort of broad audit, right? And what's happened now, as of this morning, is that Mazars has stopped working with crypto clients. And a lot of the proof of reserve stuff, I think, was, at least from their firm side, as that offering has been taken offline. And, the whole thing is just, they're basically winding down that part of their business. I don't think that's dodgy in and of itself. Like, I know it looks bad, but my operating assumption is that they realized that the risk they exposed themselves to, given it wasn't a full audit, if some bank run with any of these exchanges were to happen following their quote unquote audit, they would probably incur some sort of liability, or that would make them look really bad. So that's what I think is happening, as opposed to some nefarious cover up or anything like that. But obviously, it doesn't look very good. But as far as Binance handling the sort of stress test of the masses of withdrawals, that seemed to have gone over pretty smoothly. I understand why people are guarded and sensitive when it comes to, there was like a temporary freeze on USDC withdrawals because the banks weren't open. So a lot of kind of similarities that made people scared. But I think generally speaking, things appeared to have held up pretty well. It's not my personal view that Binance is insolvent or has solvency issues or liquidity concerns. I would be quite shocked by that outcome. I mean, they're the biggest exchange in the space by far, with like colossal market share. And the meaningful distinction, and while it's tempting to make these analogs between Binance and FTX, the meaningful distinction, like as far as we're aware, is there isn't some in-house cheating mega hedge fund which is using BNB for collateral for a bunch of garbage loans and VC investments. That whole cycle of illiquidity and massive gambling, which accelerated the FTX blow up. I don't think there's any type of analog to be made with Binance, as far as I'm aware. So I think if people want to withdraw and reduce their counterparty risk across the board and self-custody, all that, I think that's completely fine, as long as you know what you're doing. But I'm personally not super frightened at the moment as far as Binance's financial state from the available evidence. What do you think?
Yeah, I do agree. Like, I'd be shocked if Binance ended up the same way FTX did. Now, then again, I was very shocked that FTX ended up the way it did. So take it with a grain of salt. But honestly, like, it doesn't make much sense. Especially just looking at how they handled bank run so far, you can just kind of see that they have a lot of money. It basically doesn't. It seems like it doesn't matter too much. Obviously, not nice for them because they have to do a bunch of shit behind the scenes to kind of convert their own stablecoin into others and all that kind of stuff, because people obviously don't want to have the Binance stablecoin when they're running from Binance. But yeah, I'd be very, very shocked. In like, Binance just makes too much money, and they're at least run at least somewhat sensible. Now the PR and the people that kind of communicate with the community, horrendous. Never seen anything worse. Like, this is just a fucking joke, honestly. Like, it's embarrassing. what we've been seeing in the last few weeks. It's just like the way comms are handled. It's just horrendous. But in terms of, okay, do they actually have money or not? I'd be very surprised if they didn't. Now, in general, whenever this kind of stuff comes up, right, and you are all in on that exchange that has like rumors floating around it, you obviously want to pull some funds off, right? You don't want to be an idiot. Now, I think there's a very, very, very low chance that anything is ever going to happen to Binance, or at least in the next few weeks. But you still don't want to be like the guy that lost everything on one exchange just because he had all his money on one exchange, especially given that nowadays, I mean, Binance is obviously one of the best places to trade or to kind of like move from one asset like to the next, whatever. But you can do it on a lot of exchanges, right? You can be on 5 different ones, and then you just made sure that if one of them goes down, you don't go down. And if there's one thing in crypto that anyone that's been in there for at least like 2, 3, 4, 5 years has learned, is that if you're all in one thing, you're most likely going to get fucked somewhere down the line, right? And you don't want to be all in a coin. And at least if it's an altcoin, Bitcoin's been fine so far. You don't want to be all in an exchange. You want to you spread your bets, right? And the funny thing is, like, the people of us that have traded 2017, 18, know this because BitMEX just tended to go down so much that you had to have like several exchanges, because let's say like back then, like you take a position at 10,000 Bitcoin, like Bitcoin was trading at 10,000 on BitMEX, and suddenly BitMEX is down and wouldn't come back up online till like the next day, basically. And Bitcoin would move from 10,000 to 7,000, right?
Yeah.
And then you'd be shit out of luck if all your money wasn't on BitMEX, right? So back then, a lot of us kind of learned. Now it's a little bit of a different situation where exchanges just go bankrupt. I don't think Binance...
We're making progress.
I don't think Binance is going to, but like I said, you want to have at least money on every exchange or like not every exchange, but a few exchanges to spread your risk.
And I think one useful way of thinking about it is, as soon as you put money on an exchange, and this exists on a spectrum, but you're incurring counterparty risk by definition, right?
Yes.
So you take on counterparty risk, and I think there's a corollary question that has to be asked, which is that why am I taking that risk? And presumably you're taking that risk because you have some expected value from the trading that you will, from the capital that you have on that exchange. However, in these current conditions, that's not going to be the case for a lot of people, or for many people that won't be the case. So you'll have all the counterparty risk, but the actual edge that you'll be able to extract from the market and, putting your capital to work, that kind of band might end up being narrow. And it might be sufficiently narrow so that you actually make a kind of sober assessment that, like, even if you rate the counterparty risk as relatively low, if you think there's just not a whole lot going on in the market where you'll be able to put that capital to use, then by definition, the incurring counterparty risk in the first place becomes unnecessary and or unreasonable, right? So I think it's always worth asking yourself, if you're going to park money in an exchange, I mean, first of all, please God, don't use it as a bank, right? That's just not what they're for. But once you do choose to make that decision, you better have like a good reason or some sort of expectation for what you're going to do with that money. Because if you don't, then, I mean, don't take the risk in the first place.
Yes.
So yeah, I think that's maybe a reassessment for some people worth having. Like, why am I taking this counterparty risk? Is it really worth it at this point in the market?
Yeah.
Whatever else.
And the saddest part is that, like, you could use leverage really well to reduce this counterparty risk, but people are too stupid. Like, I always want to recommend this, but I always know that I cannot, because people are just going to go completely apeshit. But like, one way to very meaningful reduce that counterparty risk is by basically just like using leverage. You want to trade 10,000, or like you want to trade 1 Bitcoin, right? You can do it by trading 1 Bitcoin, or you do it by trading, like putting just a fifth of that money on a leverage exchange, and then levering up to the Bitcoin that you want to be trading, and keep the rest. So it's not really in risk of getting stolen by the exchange or anything else. Problem is, every time like you recommend that, people will take that trade, and then they're like, oh shit, Like it went up and I'm up like 50%, even though it only went up like 5 or like 10%. Let me just, and then people just go completely ape shit. That's the reason why I don't talk about it more.
Yes.
It's just, no matter how many disclaimers you give, people just kind of turn crazy around leverage. That's why
for sure.
we've been trying to kind of stay away from it, like talking about it too much, all that kind of stuff, because people just tend to gamble, basically.
Yeah, I mean, it's just supposed to improve your capital efficiency. And
Yes.
one facet of improving your capital efficiency is reducing your counterparty risk. So you can do more with less. However, another aspect of that capital efficiency is the ability to borrow and take bigger positions, right?
Yes.
It's just the issue is 99% will only consider that second use case and not the first one. But we do have a doc on responsibly using leverage that we have. I think it's still in our description. Go check it out. So yeah, if you're interested in that sort of stuff, that may be for you. So that's on the Binance and exchange counterparty risk leverage side. Next article: U.S. crypto market characterized by top buying herd-like behavior. J.P. Morgan finds. I mean, I would love to get paid to do this job because, like, it's just like stating the obvious, right? Like the sky is blue. Also, it's very strange to frame it as like a crypto thing because I'm sorry, if you look at GME, if you look at AMC, if you look at ARK, if you look at a bunch of Tesla, all of these ETFs, and the whole is the thing that you love the most on the sort of normie household retail gambling type of bubble, you see the exact same behavior just via more complex products like options, and it just happens in the same type of herd-like behavior that JP Morgan is writing about also just happens in stocks. So I don't think there's anything specifically endemic to crypto. I mean, yes, it's very cyclical and the cycles are quicker, but if the last couple of years have taught us anything, that it's just a human function of people being exposed to those new emotions for the first time, especially when there's money on the line. That's how people tend to behave, and thankfully they behave that way because markets can stay inefficient.
Yeah, I mean, I don't think there's much to add there, honestly.
It's like it's a crypto only thing because we know all the legacy guys are so sophisticated, right?
Like it's just like, I mean, I get like every time I read it, I'm just like, it's just, I mean, it's just basically they're looking for the weak guy every time. And right now it's cryptos that are going to beat on us.
Yeah, the majority of US households were likely facing significant losses in percentage terms at cryptocurrency prices prevailing in late 2022. I mean, this is like a genius research, right? Something's gone down like 60 to 90%. It's like, significant losses. It's like, I wonder how Peloton, Netflix, Roblox, Meta, ARK, GME, AMC investors are doing, right?
Oh, yeah. I mean, everyone's fucking wrecked.
I'm dragging you down with me, goddammit. You can't make this a crypto-only thing. So that's fun. Speaking of legacy crypto tie-ins, former US President Donald Trump unveils NFT trading card collection. Have you seen this?
Yes, I have.
Good old Trump NFTs.
Dude, I'm like...
Dude, they sold out mega.
Oh, yeah. If I saw it like just like half an hour ago or something, if I saw it like earlier, I would have definitely bought some. And I'm very much not a Trump fan.
On some Democrat watch list for doing that, Don.
But I mean, that's like one of the NFTs that actually makes sense buying, no? Like, it has cultural significance. Let's put it that way. It makes sense to me. Obviously, an interesting kind of move and very, very much bear market things, right?
I know.
But yeah.
I found it funny that on the whole NFT premise. I mean, look, if the utility that's been promised within these NFTs are anything like his presidential tenure, then I'd expect many of those promises not to be fulfilled to their full extent. Let's just
you're gonna get some hate for this one.
I don't know, man. I mean, he was the president and controlled the entire legislature, and didn't get a ton of his agenda done, regardless of what you think of it. But anyway, yeah, President Trump NFTs. So. This is we've got Peter Brandt NFTs, Trump NFTs.
Oh, it's gonna be so obvious. Like if this is the top or like the top of the bear market rally, and we're going to 5K next, it's gonna be
I know.
so obvious in hindsight.
It's like what was the catalyst for the next leg down? Was it this DCG Genesis contagion or the Binance background? It's like no, it's all these really old dudes just shilling their NFTs for the last dollars left in the ecosystem.
like how can we say we're early if all of these people that are close to death are starting to jump back into crypto? It's like, oh no, you want to have like the 15-year-old Fortnite kids. You don't want to have
Yes.
the like age old like 95-year-old people doing like NFT drops. Like,
one last scam. You know?
oh, we're gonna get hate for this, dude. I got a comment today.
Go on.
Comment today about like I wrote like a tweet about like the boomers, like how boomers are gonna get their legs broken, and someone was like, "Hey, boomers are like only 50 years old plus. Show some respect to your elders."
Oh my god!
I know, like, what the fuck? What am I supposed to show respect for? You know, like the world's kind of fucked right now.
Yeah.
The world's been fucked for the last few years. We've inherited kind of a shit stain, not gonna lie, like people our generation. And then you have to be like a little bit of like grateful for what? Like it's really tough to see what you should be grateful for, honestly, other
for
than
sure,
just
yeah.
like, okay, how we were like brought up, but that was my mom's doing, not some boomers in the market. So I don't know. I feel like it's justified to make fun of boomers.
Of
really.
course, yeah. It's like I've been trading for 50 years. Why? Why have you been trading for 50 years? You know, like holy shit.
Oh, I've made this argument before. If you're good at it, you wouldn't be doing it for 50
I know,
years.
fuck. It's like you could have just held the S&P and done nothing else, you know? Jesus Christ. I mean, I'm probably still going to be around in 50 years. I'll be like shit posting on Twitter still, you know, trying to keep up with the Zoomers because I'm never leaving. In any case, did you see this also? Mithril demands 53 million BNB refund from Binance following
glorious.
delisting. This is so crazy. Glorious. So they deposited 200,000 BNB worth around 53 mil at the time to list their token in 2018. Then they go nowhere. I mean, the project disappears from January of 2021, I think. So the project just disappears, doesn't do anything. And then they get a notice that they're going to be delisted. And then they're like, hey, can you give us our BNB back? And obviously the BNB has gone up to like infinity since that time or whatever. It's like up mega from when they got listed. So like, it's just... I don't know what these projects are thinking, and poor CZ had to go and actually reply to these people. But the arrogance, like, you know, your project basically disappears for 2 years, and the only catalyst that makes it come back is to beg to get your mega BNB. What you thought was what? Do you think I'm supposed to be an investment? And they just go and ask for their money back. It's just insane, dude.
I wonder what the terms were for this listing, though. Like, if it actually makes sense to ask for your money back or not. I mean, it sounds obviously... like that just sounds completely insane.
It's a shot in the dark.
I actually just I just wonder. And I mean it's just glorious, right? Because they're basically asking for another ICO run because it's like multi-millions, right? If I remember correctly.
Look, it's 1 million. Look, it's 200,000 BNB, and they paid 1 million for it in 2018, and 200,000 BNB now is a lot more than that. And so they're asking, so it's. I mean, that would be a legendary trade. I just don't think it's happening. Can you imagine just getting 200k BNB for like basically exiting? That'd be amazing. Yeah. But no.
I think like in general, like CZ just wouldn't. Like I fail to see how CZ would do it to a good actor. I doubt he would do it to like bad actors.
Yeah, can you imagine the incentives that would set up? It's just like you have to disappear so you get you have to disappear so you get delisted, and that way you get your money back at like a mega premium or whatever.
I mean they would just get like. I think that would actually be troublesome for Binance because they had so many coins and so many projects listed.
Yeah, you can't.
And they all. I still remember like. This was very shady to me in 2017-18, where they just basically allegedly extorted money out of like coins, because if they weren't listed on Binance, they would just not do anything, right? So people would get listed, and the fees, I mean, just this is public on this coin, right? 200,000 BNB. It was cheaper back then, but that's still quite the price tag, right? Like it was basically like ICOs. Raised and then paid like 10% or something for the Binance listing, which is completely insane. That was shady to me back then. Now they're coming back out, want their money back after doing nothing. It's kind of funny.
You can't fault them for trying, right? It's like a good
Yeah,
shot in the dark.
I mean, might as well, right? Might as
Might as
well.
well. What have you got to lose at that point? You've been away for 2 years anyway.
Yeah.
Crypto markets hit harder by Terra, Celsius, and 3AC than FTX, according to Chain Analysis. And their
Fucking
conclusion,
hell.
like their methodology, was measuring realized gains and losses for a set of wallets in a given period. And I don't know about this methodology. Like I really don't. I think if you view it on absolute terms, then obviously the wealth at 30K was higher, right? And so that 30K to 20K wipeout sort of in absolute terms and notionally is going to be greater, but from 20K to 15K or whatever, that's like a huge amount of wealth that gets evaporated, and especially those aren't all coins that got sold onto the market. First of all, the market caps are getting like significantly lower at that point. But also, you have the issue of like, I mean, those coins physically haven't been sold; they're like frozen. So you can't fully assess the market impact of that type of blow up because you have like forced sellers on the open market primarily when the Luna 3AC etc. stuff happens. But you don't that it's not a mirror process when the FTX implosion happens. So to me, this is just like a bit of a weird comparison, and also it also just might be a bit early to judge, because we saw that after Luna, it was like months after that there was a lot of follow-up contagion and everything else bubbling to the forefront. It wouldn't be a complete shock to see something similar post FTX, that once runway runs out for these projects or whatever else, that more people end up folding. I mean, we still unbelievably don't know anything about DCG and Genesis apart from
Yes.
rumors on Twitter, which is insane to me. Like, Genesis is the biggest fucking crypto lender, or I guess was, full stop. In terms of just the amount of loans originated, the notional values, this is like the biggest lender in the space, and they just haven't been doing anything for like a month. And then DCG sits on some colossal amount of Bitcoin, and this whole empire of DCG Genesis is interlinked, and there are notes between them, and so on and so forth, and we still don't know anything. Like, I really thought, like, that to me is still quite shocking. I read somewhere on Twitter that apparently some claims have started being sold, OTC, which isn't great. Almost like the FTX style, buying claims for, cents on the dollar. But yeah, I just thought this was like an interesting methodology of looking at, like, what was it? Realized gains and losses for a set of wallets in a given period. I'm not entirely sure that's the right way. What do you think? If you had to, if someone asks you in 1 year, 2 years, like, oh, which was worse? I mean, I know it's early again, but from what the information we have now, oh, what was worse? Was it Terra, kind of Celsius 3AC, or was it FTX? How do you contextualize that to someone?
I mean, like, if you ask that question, like, what is worse? It's 100% FTX, just because of like the fallout and also like the damage to users. I think like FTX is just the worst one out of them all. Now, price impact wise, like you could say, and I would make the same argument, hey, this had less of an impact so far than the other two, but that's just because prices are much, much lower. And it looks like FTX just sold users Bitcoin and assets. So it's
Yeah.
like the FTX impact basically was felt the entire year while they were selling all the coins, like all the user coins they were selling,
Oh yeah.
like just left and right. And you had the impact, it was slow, right? Because they were using it for other shit, which is, I mean, it's just an embarrassment. Honestly, I don't know how anyone could, with good conscience, just stand there and just know about this like Sam did and not do anything about it. Just like you have to be on drugs.
I mean, as we know.
Yes. So like I would say like price impact wise, it hasn't been as bad, and I
Yeah.
don't think it will be as bad. But that's just because the price impact has, one, been felt earlier, and two, prices are so much lower now that it's just harder to push like the market. Like it's harder to push the market down another 50, 60, 70, 80% when it's already this
Yes.
far down. And I think the whole, like the moment you see on chain in any of these articles, it's just gonna be like garbage, really. Like every single time I've seen, and there's a few exceptions, there's a few people that work with on-chain that are brilliant, right?
Yes.
But most of the time it's just like complete and utter garbage. Like you just like, hey, realized losses, whatever. Like most people hold their balance on exchanges, right? So the on-chain stuff does not matter in the slightest, because you're not going to see that on-chain. Like the losses that people have on an exchange. And then in general, just like I'm just so tired of it. Like it's just, you can justify anything by taking the on-chain
It was the
data.
worst system for the last 2 years. For anyone who like actually like for most practitioners or people who followed most practitioners who were espousing it was absolutely terrible. And I'd also like to distinguish between ETH on-chain analysis and Bitcoin on-chain analysis. I think the ETH ones, where people actually monitoring inflows, outflows, the smart contract stuff, DeFi protocols. I think that like via Nansen and stuff like that seems to be pretty interesting. And smart people I talk to use that. But like the Bitcoin one and trying to use it for directional stuff, I don't think it's stood the test of time particularly well. Also, if your on-chain analysis is so good, why do we still have no fucking transparency about the whole Terra Luna thing? Why weren't Alameda selling their coins and doing all this garbage with customer deposits and not having any cold wallets? Where was the screaming from the on-chain people on that front? Like surely if you're going to be useful on anything, it'd be in that type of forensic work. But alas, people just tried to use it for like directional gambling and ended up eating shit because they didn't know how to trade.
Exactly. So. I mean, honestly, like the on-chain stuff is great as long as people don't use it for price analysis.
I can agree with that for sure.
Because like you see the SAC threads on Twitter and you're like, this is fucking genius, right?
Yeah,
and
it's pretty cool.
Like sometimes I'm wondering like what happened to something, and I just go on a hunt, right? And that's great, and that works good. You can kind of understand what's happening, and then you see this like people trying to make it into something that it's not, which is a price analytic tool most of the time. Like it's just wrong. Most of the time it's just made up garbage. You're like, and this is how I think these people write these articles. They're basically like, okay, I think FTX had less of an impact price-wise than like the other ones. Let me see what I can find like proof-wise. And that's just not how you go about stuff, right? There's a reason why the scientific method is the other way around, right? You have like a hypothesis, and then you go like, okay, you try to prove yourself wrong, right?
Yeah.
What they're trying to do, and which is really easy to do, is basically try to find reasons why you're right. And there's infinite ways to do this in crypto with any asset. You can like you have any shitcoin and you look at any of their metrics and you're like, holy shit, there's like 1 million new addresses, or holy shit, this has been used more than Bitcoin. But most of the time there's like an explanation that isn't like, okay, this is more useful than Bitcoin or more useful than ETH. It's most of the time just like some random dude just spamming the network, or like someone executing some kind of exploit, or like there's a million reasons for it, but price-wise it's useless, right? I mean,
dude, if you're using it for directional trading, I mean, God help you. If you're using it to sound smart on Twitter and farm engagement, now you're in business. If you're using it for some sort of bank McKinsey fancy presentation for people who don't know any better and will be impressed by all your perceived proprietary tools, now we're in business. But for this, I will never forget that Casual Friday we did where I just had to lose my head and go in on that whole spot premium thing at like 40k, saying this was a bullish regime because spot is trading below future, whatever that argument was. How about today, dickhead? It's just like, how do you feel about that now? Going down in a fucking straight line with your spot premium? Get fucked. Like, learn how derivatives work before you, like, I don't know, just also imbues people with such arrogance. Like, once they know a bit of on-chain, they're like, oh, derivatives, piece of piss, price action? Oh, how hard could that be? It's like, fuck you, dude. Like, you're so shit at this. Anyway. But it's good, though. The final point I'll make is a lot of people who were really pro on-chain just moved away from it. And thank God, because they've been doing good work since then. And these are people I speak to privately, and I have a ton of respect for them, and it's never personal. And it actually makes them respect them more, the fact that they realize that this thing was garbage and move on to stuff that isn't garbage. Like, that's probably the best. Like, if you're going to get trapped in on-chain, it's probably one of the best resolutions to that, rather than doubling, tripling down or whatever. But spot premium up the fucking wazoo. Last one. Atlas Trading founders targeted by SEC for alleged fraud via Twitter and Discord. And dude, reading this thing was just like looking into the future of crypto Twitter to some extent. Because this was like the classic. You had people pump and dumping penny stocks, both on Twitter and on Discord, and talking about how they're buying and they're high targets. Meanwhile, they were actually selling. And the whole, yeah, like literally everything we've been seeing for the last 5 years, there was a huge, and this is like a pretty big on the FinTwit side, like a big group, especially in kind of low flow, low cap, like penny stocks and just names as the SEC alleges that were ripe for manipulation, and they all just got fucked by this complaint. Small caps, and then and it says, yeah, stock picker and gurus to their legions of followers. Atlas Trading's Discord server, which has, and don't fall over, 236,000 members. Right, so they just, I guess they just had a money printer where they just, it's like a money printer where they just buy some low cap garbage, low liquidity, all that type of stuff. Tell their audience and tell the Discord, oh my god, we're in, pump it, and then just fucking dump it and print. But that's like a lot of crypto Twitter for a lot of the market as well. So I don't know. Maybe we're gonna read this article. In a few years with perhaps some names that we recognize. Starting with me, of course.
I was about to say, we're just going to read it in jail.
Yeah, I can see that. So that's funny. And I think it will catch up, but this stuff always takes a while. Also, just as a random side note, isn't it wild that at the end of every article, at the block now, it has this disclaimer, which says, beginning in 2021, Michael McCaffrey, the former CEO and majority owner of the block, took a series of loans from founder and former FTX and Alameda CEO Sam Bankman-Fried. McCaffrey resigned from the company in December 2022 after failing to disclose his transactions. Jesus Christ, man.
It never stops, huh? The pain never stops.
It's crazy. Unreal. Don,
like all the traders get liquidated by Sam, then every single person that trades on the fucking exchange gets liquidated by Sam, and then our fucking news groups get liquidated by Sam.
TradingView is next.
Just leave us something, dude. Like,
give us a corner.
What are you doing?
I know, it's fucking disgusting, dude. I think that's all I've got. I mean, Bitcoin tested the range midpoint and didn't go to zero. So that's clearly the mega giga bottom before it turbo rallies. And it just means I've got the best levels in the world. And my Litecoin roast was the bottom as well. That's obviously all true.
Please.
We didn't talk about BNB. Dude, like, just as the last point that we'll cover, in terms of TA or whatever else, I mean, this thing has been very pukey. Understandably, given the narratives flying around. Is there a point where you nibble on this and think it's mispriced relative to the FUD and all that type of stuff? And is it the range low at around 210?
Yes.
Okay.
I mean, the thing is with BNB, right? I actually wanted to buy it off of the FUD. That's why I kept a bunch of money on Binance, because I wanted to buy BNB, but I thought it would go much lower. It didn't. But the FUD's still ongoing, and prices have been going lower just based off of everything going lower. And I think at 210, I might take a little bit of a gamble on it. It's risky. It's an exchange coin. If the exchange goes down, it goes to zero, right? Just how it is. I don't think Binance is going to go down. And I think if we have a bounce, BNB is going to lead the charge just based off of the people basically betting on BNB going down, getting completely rinsed. One thing to notice that it's really hard to trade BNB, like short BNB anywhere but Binance, really. So there is less fuel than you'd like, because only an idiot would short BNB on Binance. Like, that's just so stupid. I've seen too many people do it. That, like, I think there's still quite a few that do this kind of stuff. They're like, BNB is gonna go, like, Binance is gonna go insolvent. Let me short Binance. Like,
I mean, dude, if the past week has been anything to judge, then the fucking Binance official account will just reply to them with their passport photo, and be like, "What now, bitch?" You know, like, what the fuck? You definitely don't want to do that.
No. Yeah, that was horrific, by the way. I still think, like, the biggest niche that needs to be filled in crypto is like a PR firm.
We'll do it. Hit us up if you're listening or know someone who needs crisis comms. Our qualifications are that we're not fucking idiots most of the time, and that makes us eminently qualified compared to whoever the fuck is running or not doing their job at all.
Yes, just ignore my Litecoin trades. Otherwise, I'm a reasonable person.
You can ignore me, full stop, and you have an all-star team.
But yeah, I think that's it. Like, 210 range low is interesting for BNB. It normally wouldn't be. I don't like when it retests range lows, but if it is off a FUD that is unreasonable, I'm down. So
And then if
that's
that
like,
fails, it's a gap fill to $50, right?
oh yeah, it's a gap fill to we all get a job again, because if BNB goes back to 50, we might have to find a normal job again. I'll be selling whatever candles at a
No.
candle shop.
We'll go to Atlas Trading Discord as fucking mods. They've got a crypto section. We'll we'll find some upstanding people there.
I'm not entirely sure if they're still gonna be around by that point, but oh god.
Great. All right. Thank you for listening to Casual Friday. Duck, as ever, thank you for your expertise and coping. If you enjoy Casual Friday, like the video, please. It helps us a lot. Leave a comment, subscribe, share it, all that kind of stuff. And have an excellent weekend. We'll see you next week for our usual programming.